Good morning, y'all. It's Memorial Day weekend, and hope you guys have the weekend off and enjoy whatever you do on Memorial Day weekend. I'm gonna probably be barbecue. Not probably. I am gonna be barbecuing some meats today. So my wife has them marinating in the fridge. So this afternoon I'll be grilling up some meats. I don't know what kind of meats, just all kinds of meats. How are y'all doing? I'm doing pretty good. Um, got the weekend off. I was supposed to have 3 days off, but we had a plumbing issue at home here and had to stay home and meet the plumber. Didn't have to pay the plumber. That's one advantage of being a renter. So we got that squared away, and I just decided by the time he was done, I just decided I wasn't going to work that day. So I had to work Friday. I was planning on having a 3 day weekend, but didn't happen. But that's okay. This coming week, I'm actually going to have a 4 day weekend. Thursday, Friday, Saturday, and Sunday. Thursday's my birthday. I'm not going to tell you how old I am. I'm going to let you put it down in the comments and guess. I don't care what you say, but it would be really interesting for me to hear guesses on how old you think I'm going to be on Thursday. So that's it. Let's talk about the portfolio a little bit. I'll talk about a couple of one stock I bought and then one option I sold. We'll talk about the option here pretty quick. And I'll give you my thoughts on them. Okay. So, what did I do this week in options? One thing or two things. I sold a TAN, that's the solar ETF by Invesco. I went out to June 28th, did the 39 strike, collected $70 for that one. And then the one I want to talk about is Square or Block, whatever you want to call it. It's the one that most small businesses use to run their payments. For the most part, that's what they are. I went out to June 28th, did the 59 strike, collected $80 there. If we look at Square, we look at the chart, right? And what the heck? Now we're not going to have a chart? Come on. You gotta be kidding me. Let's refresh that thing. There we go. We look at the chart. They're in this range, right? Support, resistance. Support got support around $65 or so. It's gonna hit that pretty soon. But I went down to 59, which is below its average, its moving average. The risk here, though, if any of you chartists are out there, is gaps. Okay, you see this big gap up right here between 44 and what is it, 50-ish, right in there. If this support level gets broken, like it falls below that support level, look out below, because it's not a guarantee, but charts like to fill these gaps all the time. Like you see this gap fill right here, this gap up, filled it, and then came back up. This one still needs to be filled. It's not necessarily that it will, but that's the risk involved. But I was looking at Square, and I was looking in FinViz. If any of you guys use FinViz, it's a great place to look at quick metrics. And I was looking at their forward PE of 15, pretty decent. Then I was looking at their earnings per share next year, 28%, earnings per share next 5 years, 60% increase. Those are big numbers. If they can achieve those numbers, this could be a pretty decent holding if you are into individual stocks. The one knock on Square is the volatility. It has, of course, 2.55. Now, beta is 2.55. Now, the what do they call it? The TLDR? I don't know even what that means, but it's the short, version of beta is basically the stock market, the S&P 500 basically is 1.0. So anything above 1.0 is more volatile than the S&P 500. Anything below 1.0 is less volatile than the S&P 500. That's a high level explanation. So you're going to get your returns, and you can also look at it as risk reward, right? Anything over 1.0 is riskier than the S&P, but has more reward. Anything below is less riskier and less reward. So that's Square. Now, someone had mentioned that they did PayPal, and that's another one I was looking at was PayPal. And let's see, did I have it up here? Yep. And it's a pretty similar chart, really. We look at PayPal, it's a value stock right now, not just forward wise. They don't have as aggressive of earnings per share forecasts, probably because they've been around way longer. PayPal's been around forever. Like, I think everybody knows PayPal. And their beta 1.4, so a lot less volatility, but a little less upside than Square. So I think either one would be good to buy right here if you're into individual stocks. PayPal, if you're a little less, what do you want to call it? Risk averse, and then Square if you are a risk on type of person. So that's what I did. Square. At $59, I wouldn't mind getting assigned to that one. So let's see. Premium cooking. What do we got? Only got $104 coming off of May, and that is my TQQQ put expiring next Friday. I tried to close that for a couple pennies, but it didn't fill, so we'll just let it go. And then for June, all the options I got only $430. I'd like to add another couple $100 to that over the next week. Probably next week I would like to, but if we don't, that's okay too. So quick overview, $523.57. And then last but not least, we'll talk about what I bought. I bought Leggett Platt. Now, this is, if you look here, Spec. Speculation, pure speculation is why I bought this. They cut their dividend. They still pay a small little token dividend. I kind of wish they would have eliminated it altogether. But Leggett Platt, long history of, if you may not know the business, but you know the business. They basically make mattresses or the components of mattresses, and they have like hundreds of patents, and look them up. Now, I'm not suggesting you buy this. I bought this a little bit over $11 a share. It's already down, but I'm just going to wait this out and see what happens. I think they're being overly punished. Now, the end of the economic cycle, of course, that's when people get, the consumer's squeezed right now, right? So their business is hurting. But, a century-old business, I don't know. It could go away, but it's a small bet here. In hindsight, I probably should have just bought a 2-year call option on it. It would have been a little bit cheaper. It would have been a lot cheaper, actually. But it is what it is. I'll take the 100 shares and we'll go for it. And that's all I did as far as buying. I did drip a couple of shares of PEY ETF, and then I dripped a couple of, or at least one share of SPY. That brought my monthly dividend income up to $670. So not too bad. We're a little bit better on cash, 37% in cash, but nothing out of the ordinary here as far as allocation. That Leggett Platt only at less than 1% of the portfolio, so I don't mind putting that in. Now, and then a lot of you are saying, what are this red? This reds are, the reason why these percentages are in red is because they're below 2%. So I would be comfortable adding, to these positions. Not so much Leggett Platt, because I got 2 spec plays. I got Leggett Platt and Medical Properties Trust, and that's over 2.5%. And I'll probably not want to put spec plays over 3%. So I can add to that. I can add to Penny Mortgage Trust. I forget what that's called. I can add to THQ, I can add to UTF, I can add to Synchrony Financial preferred shares and RDVI a little bit. So that's all I got for you. My notional for my options, 25,250. So if all these option contracts were to be put to me, that's how much cash I would need to cover them. So that's all I got. Thanks for being here. Hope you enjoy your weekend. Again, put a comment down there. Tell me honestly how old you think I'm going to be this Thursday. So hope you guys enjoy your weekend, enjoy your holiday, and we'll see you next week. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.